So everybody, my name is Sachin Goklani. It's my pleasure to introduce PayGroup to you today in the next few minutes. And to do that, what I'd like to do is just ask some simple but burning questions in HR today. Have you ever had your pay calculated incorrectly or know anyone who has? Have you read about underpayments and payroll frauds? Has chatting to HR ever been a frustration to you? And what PayGroup is simply is a multi-country payroll and human capital management solution provider. So what does that actually mean? We, for our clients and clients' employees, ensure that we calculate their pay timely on a regular basis. B, we ensure that our clients and clients' employees are kept compliant in all our jurisdictions that we service them on a regular basis. C, not just compliance and calculations accurately, we ensure that our clients and clients' employees are paid on time and paid the right amounts in their salaries, and we also pay the right amounts to the statutory bodies to keep them compliant. And finally, we offer what we term the hire to retire solution by digitizing our clients' HR teams and for giving our clients' employees all the digitized modules to perform and to manage their communication with payroll divisions. And one of the latest ones we've released is our new chatbot called Tozy, which you've seen on the screen there. Next slide, please. So just a snapshot of what PayGroup actually is. With 14 years of growth, PayGroup today services customers in 33 geographies across Asia Pacific and Middle East. We do that for payroll. We provide a global HCM solution with all the common modules that you would have heard in the market, like applying for your leave, doing your expense management, rostering, timesheeting, onboarding, and so forth. And I'll come to that soon. We've grown our client base to 915 clients, which are predominantly multinational corporations, either selling to the headquarter regionally or selling to the subsidiaries that they have across the regions. Over time, we've grown from a simple office across in Singapore and in Asia to 11 locations globally through organic and acquired growth. We've extended our team from a humble 2 people 14 years ago to 183 that we are today. We've really invested and focused on converting all those manual HR processes into more digitized processes. And we've also enabled most of our HCM suites to be delivered on scalable SaaS cloud platforms. One of the great things that we've also been able to achieve over the last 3 years, and we're very proud of that as an Australian and Asia-based provider, that Gartner has recognized us in their multi-country human capital management guide. And it's our 3rd year running that we were included in that, which our 3rd year finished about last week. So happy to point people towards that if needed later. Next slide, please. So our investment over time and our growth over time has led us to go from simply doing what we were originally 14 years ago, which was offering timely and compliant payroll, to what we are today, providing 27 HCM modules to our customer base. Some of these are quite common modules, which I'm assuming everybody would have either heard about or used in the past, and payroll being the most common one across 33 countries. Then we have the common modules, as I mentioned earlier, like your leave modules, and that's where you can use your mobile apps, PayGroup app, to apply for your leave, get the workflows approved. Similarly with claims management. And we've invested a lot in developing more around recruitment, time and attendance, rostering, learning and development, talent management, as we move our customers from your core HCM to your strategic HCM, offering the, as I mentioned earlier, the hire to retire scheme for all our clients and our clients' employees. And we develop all these modules out of our teams based in Australia, in India, and in Philippines. Next slide, please. Who are our customers? We've shown a sample here on the screen highly diversified, very loyal customer base. How do we generate so many customers with our quality? Well, it's there in our retention rates. We sign customers for a minimum 3-year term, repetitive revenue, annual recurring revenue, 95% retention rates, which gives us the opportunity to continue to cross-sell and upsell as we add more geographies or as we add more modules to our HCM suite. Some of the common names that you can see here: Westpac Bank, which I'm sure most of us will recognize; Appen, in the professional services, we do payroll for them across 7 countries in Asia Pacific. You've got Michael Page, who is a great workforce management company where we do a lot of contractor workforce management. And we have Infineon, some of the great Asian multinationals as well, who have sprouted out across Asia Pacific and even into Australia, with a great example being Temenos, who has been a great Asian customer for us, but has done 5 acquisitions over the last 3 years in Australia, and we continue to grow with them across the region. Next slide, please. To give you a view of how the company has performed since IPO, we thought we'd give you a bit of a growth scorecard. And we've listed on 29th of May 2018, so our first real year of reporting, and we are a 31 March year-end company, not a 30 June. So our FY19 is 31 March 19, and our FY20 is 31 March 20. You can see that how we measure our growth is through the annual recurring revenue that we have. And between FY19 and FY20, it more than doubled through organic and acquired growth. The core driver of our growth is really the number of pay slips that we deliver on a weekly, fortnightly, or annual basis. In FY19, that was 630,000 for the year, to where we are at the end of FY20 at 4.7 million. And over time, since 1 April, we've also done an acquisition across India and Malaysia, which also brings further number of pay slips and adds more and more to our module suite. And that acquisition was announced in mid-July on our ASX. So we've done acquisitions since our listing, and we'll continue to look at opportunities. So that we've done at least one every fiscal year. The FY19 year, we acquired a business in India. We call it Pay Asia India. And in FY20, we acquired a great workforce management SaaS solution company in Australia called Astute One, which has further added to our suite of modules and services we can provide and given us a greater base in Australia. Our client base has also nearly doubled, which reflects the annual recurring revenue also doubling. Our internal employee size has also grown substantially, and that's predominantly because of the acquisition of Astute One in Australia. We focus very heavily on our organic growth as well. And how we measure our organic growth is the number of sales that we report on a quarterly basis in our 4 Cs that we announce on the ASX. In FY19, we closed $4.9 million worth of total contract value, and the total contract value is a 3-year projected revenue out of that one customer or out of multiple customers. That increased to 5.5 million in FY20. And as you'll see shortly, we've been able to demonstrate continued growth even in this challenging environment, where we have in our first quarter of FY21, which is April to June this year, we've sold already $3 million worth of contracts compared to a 5.5 in the whole of FY20. So our growth trajectory is very pleasing indeed. And one of the core aspects of growth is really also in our operating cash position. If anyone has seen our 4 Cs since IPO, and what the guidance we gave to the market in half 2 of FY20 was that we wanted to make sure that we became operating cash flow positive. And we've been able to demonstrate that from FY19 to FY20, the minus 4.8 million operating cash flow that we had at the end of FY19 is almost neutral at FY20. But since half 2, which is the October onwards from 2019, every quarter since, we've been demonstrating positive operating cash flow, which was one of our core guidance we gave to our investor base and for future investors. And the last point I want to touch on in the growth scorecard links directly to our organic growth, which is our global partner program. And the global partner program acts as a great extension to our organic growth, where some of the world's finest organizations out of US and out of Europe partner with PayGroup across Asia, Pacific, and Middle East, where PayGroup has a significant presence and an undisputed leadership in payroll and HCM delivery. They do all the selling to their customer base in US and Europe, and they choose PayGroup to deliver that for their customers on an ongoing basis. So it really acts as a great extended sales team for us. And we've extended that partnership from 3 companies to 7 companies in FY20. Next slide, please. What are the next few, what's the growth opportunities for PayGroup? We're going to continue to adopt more and more digitization as the world works remotely, as the world faces more challenges in making sure that their employees are kept whole, kept compliant, paid on time. We will continue to provide mission critical services. These are payroll, compliance, and payments. And on top of that, we will add strategic HCM modules to ensure that we cover our clients and compliance employees from a hire to retire. We're going to continue looking at acquisitions and partnerships. We're very bullish, and since IPO, we have had a great number of approaches to us for companies wanting to be part of PayGroup because they've seen the journey that we've taken and want to be part of that growth with us. And we'll continue to grow all our different service lines, which is offering payroll and compliance and payments as a service model, offering our HCM suites as SaaS model, and growing our treasury division, which has been the fastest growing division within PayGroup over the last few months. Next slide, please. What does F121 look like? I've already mentioned to you that our Q1 has been a tremendous quarter of sales, and we'll continue that trajectory of selling to more and more customers as adoption of digitization of payroll and HCM is increased. We'll increase our global partnership program and ensure that we can bring in more and more treasury services to upsell and cross-sell to our existing base. Our organic growth and acquired growth will ensure that we continue to increase our annual recurring revenue on an ongoing basis as we move our company from a micro to small cap based land. And of course, we should never forget how to do things more efficiently, where PayGroup's very focused on identifying cost efficiencies to ensure that we not only focus on our top line, but also our bottom line. Next slide, please. Just to introduce you to our board of directors, very dynamic and industry focused. Basically the board, we call it $1 billion board. We've got Ian Basser, our chairman, who used to run Chandler McLeod, $1 billion company, which sold to recruit.com. Mark Samlal, who's our managing director and CEO and a board director, has extensive experience in the industry of HR and has run hundreds of million dollars of companies on the Singapore Stock Exchange. Frank Niron Bansal on the right corner is a guru in the payroll space globally and spent over 25 years at the global leader called ADP. And when he left ADP, he joined PayGroup to help PayGroup become the ADP of Asia Pacific. And David Fagan, who has ex-managing partner of Clayton Utz in Australia, rounds us off with his great expertise around banking and finance to keep the group growing, especially in its treasury functions as we focus on that aspect. Next slide, please. So how do you find out more? Well, we've uploaded our presentation onto the ASX portal today. So if you click on PYG, you'll find this, and the click here button when you get the presentation will take you to quite a range of analyst reports who've researched PayGroup over the last 2 years and have their own independent opinion on where our growth is projecting. Thank you very much, Tim and David.
Thank you, Sachin. Sorry, I've had some internet problems at my end today.
No problem.
We've got some questions around, I mean, they're really impressive numbers. A lot of the growth comes from acquisition. What's the future plan for acquisitions relative to natural growth, for want of a better word?
Focus is on both. So organic growth comes from our internal sales force that's spread around some locations in Asia Pacific and Europe. We have a global partner program, as I'd mentioned, and that really does generate a lot of sales for us where these partners who sell global deals sell using the PayGroup rate card of traditional services and modules, and basically hand over those clients when they sign them for us to deliver. So that organic growth will continue. The acquisition part of our growth is where a lot of single or 2 or 3 country solution providers want to join PayGroup under what we term the acqui-hire. So they're very similar service providers that we have today, like payroll, compliance, payment, and some module suites. And we bring them into PayGroup to enhance our geographical offering, or B, a modular offering, or C, bringing on some great contracts that they have. So the focus really is on both, Tim, in parallel.
And there's a couple of questions here. There's been a lot of underpayment scandals at Woolies, MasterChef, yes. Can't remember, George, whoever. Yeah. So is this a program that is embedded inside these businesses, or is it something that you operate externally? Is there a compliance reason to be using this software as well?
Well, absolutely. Some of the misunderstood aspects of underpayments today are that the technology doesn't work properly. The key here is that when you hire people in HR who'd never went to uni to study HR, they're trained to be perhaps accountants, or they've got some experience in HR, and you're asking them to implement a complex suite of awards, let's talk about Australia for a second, into a payroll platform across a range of employment agreements. This is where your underpayments are coming in place. I think the most recent one this week has been Din Tai Fung. You know, some staff has been underpaid. Well, that's really a reason for the softwares in place are fine. It's how you implement all those awards and all those employee agreements, and how you do your quality controls and your checking around what the system's producing. So we've got that across 33 countries, across 14 years, across all the multinationals, with 95% retention rate. And we are, you know, all our clients get audited with their compliance and statutory regulations. We make the payments on time. So it really is the function of knowing how to use the great systems out there, but not just how to use the systems, how to quality control around it and be an expert in compliance globally.
Sachin, and just one more question. There's some questions here about your competitors. Yep. Elmo gets mentioned. Can you talk to who your competitors are in this space?
Yeah, we get compared to Elmo a lot in Australia. Elmo, great company, focuses on your strategic HR things like learning and development, whereas PayGroup has been born through the critical aspects of HR, payroll, compliance, payments, lodgement. We've added strategic HCM on top of that, but our core remains making sure that we are part of a mission critical. And who are our competitors there? The Goliath in the world is ADP. You've got a recent one called Ceridian that's been making some acquisitions. They made an acquisition in Australia last year, and they bought in Asia this year. You've got Ascender, the old Talent2 business, which spun off to become Ascender, and they provide a multi-country solution across their modules of services. So these are the common names that you'll look around globally, but for a 33 country Asia Pacific and Middle East solution through one vendor, really there isn't anybody else that does that.